Hello everyone, welcome back to the Japanese Company Handbook Challenge. And today we have a goal. So we're technically supposed to find 10, right? And when I first beta tested this, we were able to find like a few. So I thought it'd be easier than this, but I got kind of stuck in like a zone in the Japanese Company Handbook where there were a lot of construction companies that were pretty, I want to say, fairly valued. Or weren't undervalued enough for my liking. So we found essentially, 4 companies so far with potential where it's probably worthy to look deeper into these type of companies. And so where we left off was at 1909 yesterday. Well, last time that I streamed, and then I got distracted by the security guard. Don't want to get into that. And so I had to kind of prematurely end the stream. So today we're resuming it at page 163. That's what we're doing. And the goal today is to bridge the gap as much as possible. So even though, I have 6 more to find, I'm going to roll that into essentially the month of August. So basically I have to find 16 companies. That's going to be tough. But yeah, I am in your guys' debt, so I need to find more of these companies. So today we're gonna just resume that process. Okay, so 190A, so for any company with the A, so to streamline the process, like I basically, any company with too limited of a, financial history, I'm just gonna skip over. Any construction type of company, I'm gonna skip over. Anything that is like unprofitable or that is potentially very likely to be in the too hard pile, I will skip over. So 190A, Cordia Therapeutics, a drug discovery venture aiming to develop Japan's first or the world's first novel anti-cancer drug. Oh wow. Okay, so they have been quite unprofitable. Let's take a look. 190A. Stock hasn't really gone anywhere, as in fact it's gone lower recently. Yeah, very limited of a financial history. So I'm gonna, and this is not really something that I am, it's not in my circle of confidence at all. So yeah, I never took biology in high school, only chemistry. Yeah, so I'm gonna skip this in the too hard pile. Okay, next, Sumitomo Forestry. Okay. The 3 main lines are the trading of lumber and construction materials, the construction on consignment of custom-built homes, as well as the overseas business such as dealing housings in the U.S. and Australia. Originated as a firm harvesting timber in neighboring forest lands to establish tunnels or smelting facilities when the Sumitomo family started developing the Beishi copper mine in 1691. Formed in 1948 when the forestry department was separated from the main firm of the Sumitoshi Zaibatsu due to its dissolution. Okay, I think I might have heard of this. This company might have been brought up on FinTwit before. But we'll see. We'll try to figure out why. So, okay. Formerly in October had a high of 2,400. Dropped to as low as almost half that. Yeah. And then risen up to around 1,500. So from around 1,250, 1,500, yeah, 300. So it's up like a 20-25%. Do they pay a dividend? Let's see. Okay, almost 4% dividend. Okay, the profitability has been improving, but formerly it was pretty low, like very low profitability, and then somehow it has been looking a lot better. Revenues have doubled since COVID almost. Let's see here. Yep, it's doubled. I'm not sure if this is tied to lumber prices. I've actually never looked at lumber prices before. Yeah, I never really looked at like forestry companies, so this was gonna be new to me. Okay, 550, a 5-year time frame. Okay, so during COVID, lumber prices went up through the roof. Holy crap! And then plummeted in 2021 and then risen a lot back then. And it's stayed quite stable post-COVID. Post-COVID. Interesting. How about 10 years? Interesting. But it seems like it's on an uptrend right now. Yeah, low of around, yeah, let's stabilize around 500. That seems like where it bottoms out, and then well, 250 at one point in 2020, April 2020. So the initial onset of COVID, it dropped and then ramped up. Maybe because people were doing renovations or something. It's really tied to like construction and like housing starts. Yeah. So operating income. So they have been experiencing some level of operating leverage because operating income has gone up like 4 times since 2020. Yeah, 6 times if you look at 6-7 times if you look from this period. 2014 to 2016. What's our enterprise value? Okay, so they have a lot of debt. They're 960 market cap. Debt-wise, add another 400, so around 1.2 enterprise value. Oh no, 1.4. Yeah. Around 1.4 billion. Sorry, 1,400 billion enterprise value. Multiples. Wow. Next 12 months PE is 3.2 times. So does that happen? 10 times, 10 times. So what's their profitability been like? Let's see. Okay, so 200 million on 1.4 billion would be somewhere in the vicinity of 7 times. Right. EV to EBIT. Net income. Ooh, why is it that low? Oh, there's a major minority interest. I wonder if this is the same company that I've looked at, that's been brought up on FinTwit. Maybe a different company, honestly. Like, they have operating leverage, but like, they don't look that cheap. 1.4. What other size? 1.7, 1.4. Yeah, so this was on 209 times. Okay. So now they're trading at around 7 times. They have a lot of finance. I wonder how much investment securities they have. Maybe they have a lot of that. Oh, they have a global website. Oh, I just noticed how messy my background looks. I'm gonna clear it up a little bit. Okay. Cool. Investor presentation. I'm gonna have a quick search on Twitter to see if there's any comment, because I remember seeing someone comment on Sumitomo for forestry before. I feel like Berkshire bought it. Okay, so this is a really funny username if you know Chinese. But essentially, he's saying that Berkshire owns stakes in 3 of the major home builders in the U.S. I don't know if he means it's Sumitomo 1911. I don't think that's what he means. I think he's saying that because because Buffett has had experience in investing in Japan, that this could be a natural acquisition for them. Yeah. Yeah, operating margins have improved substantially. And let's see. Owns and manages 48,000 HA's hectares. Forest areas HA, and then what is hectares, right? Does HA mean hectares? I believe it means hectares. Why does it not give me a straight answer on Google? Yeah, HA means hectare. Okay. Manages around 237,000 hectares of plant forest overseas, mainly Indonesia, Papua New Guinea, and New Zealand. Through a forestry fund in the U.S., manages an additional 80,000 hectares as of December 2024, targeting expansion of 500,000 hectares globally by 2030. Ooh. So this might be an asset play then. This could potentially be an asset play. I think that's what they're trying to say. Anyone else talk about it? Okay. Went up 70% year to date. Actively raising its dividend, for the name company has many forestry holdings in Japan and abroad. One of Japan's major resources is its plentiful forests and water. History of dividend increases. Their homes are being built in neighborhoods. Interesting. Stock has been doing very well. Okay. So one thing to look at is pay attention to the balance sheet based off these comments and determine, yeah. So if they're low, like 7 times EV/EBITDA isn't that bad. right? If they also have like a lot of land, right? That could be very interesting. Yes. Okay, financial results is it English? Yes, perfect, awesome. Okay, I'm gonna quickly look into that. Oh, I should also change the ticker right now to 1911 because that's what we're looking at. Sumitomo Forestry. Interesting. Fiscal year end, so fiscal year ending. I don't know if this is 2025 or 2024, but let's say 2025 for now. Oh, this might not be their most recent though, because let's see, hold on, December 2025, but they already have Q1 coming out. So, good thing I took a look at that. Yeah, so the most recent was Q1. So I'd look at that instead, actually. So this is wrong. So, okay, this is probably fiscal year 2025, but yeah, share price currently is 1567. That's easy to remember. Excuse me. Sorry, 6068, 168. 168. Oop. Cool. Balance sheet. Okay, we do have short-term marketable securities. Okay, just that. I just read it twice just to be sure. Company has buildings, land, timber, lease assets. That seems low. Wow, there's a lot of real estate for sale though. A lot of real estate for sale. Investment securities. So this is a million yen. Wait, hold on. I think I'm doing something wrong here. Hold on. That's a million yen, 272 billion. That's not. Hold on a sec. I think I'm doing something wrong here. Give me 1 sec. Pretty sure I'm doing something wrong here. Hold on. This is thousands of shares. Alright, so is that... Let's put a market cap here. 1 sec. 962. What? Three months. So this is Q1, yeah. Q1. 206 million. 1567. Yeah, I don't think I did this wrong. $320. How come they have something is not right here now? Let me just double check. Seriously. 191. Oops, 1911. It says 600. Did they? Oh, maybe they did a stock split. Okay, there's a potential that they did a 3-for-1 stock split. There's potential for that. Let me just double check. IR News. So there could be a stock split somewhere. Yes, stock split right here. We are correct. Yeah, 3-for-1 stock split. Okay. So, total number of shares after stock split, 618. Total number of authorized shares after stock split. Okay. Do you have any treasury shares? What's the treasury share count after that? I was like, that doesn't make sense. Okay, so I said 206173. So now it's 618. I don't have data on treasury shares. So we have that much right now. And then I think I saw something about like tender offer of shares of Litex. That's different. They're not raising funds there. Let's see. Acquisition of a different company. Okay. So we'll keep it simple. We'll just assume that this is the amount of new shares, and if there's treasury shares, we'll just take this and times by 3. So it'll be that. Times by 3. Yeah. Market cap, 962. Does that make more sense? Yes. Very. Okay. Yeah. Exactly the same. Cool. That's good. Glad we resolved that. Right, that's usually not a mistake I make. Okay, so that makes a lot more sense now. So these numbers are actually going to change a little bit. There's 157 billion of cash, and they have that much short-term investments. Yeah, that makes a lot more sense. And then investment securities. Do that. Long-term loans receivable, retirement benefits. We'll just do long-term investments, it's fine. Okay. Short-term debt. Current portion of bonds payable, short-term borrowings. I'll double check one more time, because this is a construction company, so we gotta not miss anything here. Okay. Long-term debt. A lot of long-term debt. I assume bonds payable is dead as well. Okay. Okay, what are the assets here? Okay, just under 1 times book. Oh, there's the NCI. Retained earnings gone up. Foreign currency adjustment. Okay. Tangibles, total assets, current liabilities. Four total liabilities. 1, 2, 3, 4, 8, 3. Okay, full year dividend. So, because this was a 3 for 1, you're gonna multiply this by 3 times, right? Yes, I say 91, 3. The fuck? That can't be true. No, that can't be true. That absolutely cannot be true. Oh, did I type something wrong? Hold on. 91. 91. Oh, 182. Oh, I'm dumb. You're supposed to divide by 3. Sorry. My brain, not the computing properly, you know. Okay, 3.9%. Okay, good. And then we'll just input the last couple of years data. So we're working on 2025. So this would have been 2023. Right. So we are expecting okay, so a slight decline in operating margin. That's what it looks like. That's low on a PE basis. Low on a PE basis and low on an EBIT basis. Yeah. And we also had the results over here. Three months ended. Wait, but they don't have the fiscal year? Hold on. They don't. We do need the fiscal year stuff, bro. Financial result. Okay, we have it. Wait, why are you giving me fiscal year ended 2024? No, can you open it in a new tab here? Okay, there we go. That makes a lot more sense. Okay, margins were slightly higher before. Probably even higher. Oops, that was not supposed to be that one. Okay. There we go. One oh two, 116. Okay. Quite the change in capex, so I should look into that a little more. But I was gonna take a look to see if they did any like other things, because this can tell me if they did acquisitions and that kind of stuff. Time deposits. That's investing. Sale or redemption of securities. Okay, they've been consistently buying investment securities. Transfer of business, payments or purchase of subsidiary shares resulting in change in scope of consolidation. So they did do that as well. Okay. So they buy back shares. Take a look here. Okay. Don't see any share buybacks. No, don't see any. Okay, let's take a look at the historical track record. Don't know what is going on outside, but yeah. Okay, let's see here. Depreciation. Ooh, went up recently. What's our capex been? Okay. Okay, decently high. Minus 30 depreciation. Why is it been averaging 30 in depreciation amortization is so low? 37, 26, 19, 18, 16. Okay, so it hasn't really fully ramped up. Okay. I think that, okay, well, what's the recent capex? Recent capex is high, right? It could get to 40,000. Oh, this company probably has some analyst estimates, honestly. Probably does, yeah. And next 2 years are in here. 2.6. What did they recommend? 2.6, 2.55. So they believe higher. 2.4. Workforce is a little bit lower than what the company is forecasting. 182, 183. Okay, also lower. EPS 184, 200. So lower across the board, essentially. CapEx 65. Got 80. 65. Is that blended? Broski? So this would be this would be less than 70 if you can include it in, right? That tells me that's a blended thing. So sure. Let's say something like this. Then could be something like that. Okay. So free cash flow is a high multiple because they're actively investing into something. I don't know what it is, but they're actively investing. Yeah, less than 8 times PE is low, I think. Actually, I don't really have a contextual context here. 4% div yield, 8 times PE. Yeah, they have. So I guess the idea is if they continuously buy up land to produce lumber, then their income is going to continue to rise up, right? And raising debt, and they can pay down the debt, and they have access to cheap Japanese debt, then, so there's that growth backing potentially, right? And then once they get to, let's see, 2.6 billion. How are their margins? Margins stabilize around 8%. Book value per share. Yeah, and trading at 1 times book too, right? 1 times book. So it does have, and it's growing, so it does have limited downside. So I'll give it that. For me though, it's like this is not an industry that I'm completely familiar with. But let's take a look at their recent IP. Let's look at the segments real quick. I want to take a look at the segments. That should be interesting. Let's see if there's any segments here. This is a Canadian translated, sometimes English translated. My apologies. English translated, they tend to be more simplified than the Japanese version. Okay, so timber and building materials. Oh, actually is not their main business. So there's housing. And there's global construction and real estate. Curious what that is. Which is their main core business because they're generating 32 billion from that. Wow, okay, so that's like over 10% margin there. Housing is like really low, like just over 3%. And then timber, wow, how is it that low? And timber is not performing well. It's like not even 5%. So basically the company's getting carried by global construction and real estate. And if the idea is, they benefit from like some synergies with like, sourcing lumber and timber to the housing or global construction, like we don't see the intersegment sales. Like we only see like 5 billion of it. But then this is only 1 quarter. So it's best for us to look at, wait, was this annual? That was not annual, right? Let's take a look at annual. So on an annual basis, let's look at 2024. Annual basis, segment income 10. So still below 5% here. It's like 4. This is around 7-ish, 6, 7. Here's over 10 again. So again, global construction real estate is what is driving the business. And just let me take a look at the segments real quick. See how they define their segments here. Okay, in the single-family house business in the U.S. Oh, okay, that's what they're focusing on. Performance remains strong as unit selling prices increase against a backdrop of robust demand for housing, and the number of units sold also increased in the states of Texas, Maryland, Utah, and Washington, where the group conducts business. In March last year, we acquired the housing business of Biscayne Homes, a company that builds single-family homes in Florida, enhancing our business presence in the state. Oh, so they're doing acquisitions. Nice. In a fully integrated turnkey provider FITP business, which integrates the process of panel design, manufacturing, delivery, installation, and a streamlined production system, results were sluggish due to the impact of weak multifamily housing market. Although measures were taken to enhance the business structure, such measurements include the start of operation of a new factory in North Carolina. In the real estate development business, results were sluggish due to partial postponement of the sale of multifamily housing and commercial and multi-use complexes that had been scheduled to take place in the fiscal year under review. Nevertheless, we promoted initiatives that contribute to the realization of decarbonized. Okay, screw that. For example, we complete the construction of, ESG conscious 7-floor wooden office building in Texas. Okay. Okay, they collaborated with some Japanese companies. With regard to single-family homes business in Australia, okay, so this includes Australia. So Australia and the U.S. Performance recovered as demand mainly from first-time home buyers remained strong in the state of Western Australia, and unit selling prices rose, although the market environment continued to be difficult due to persistingly high policy rates and construction costs. In November last year, we acquired equity shares in Metricon Group, Australia's largest builder, and that mainly engages in the order home business in Eastern Australia, in our efforts to further expand the single-family homes business in Australia. In medium to large scale wooden construction business in Japan. Oh, okay, this includes Japan, so domestically. We steadily advanced collaboration with Kumagaigumi, for example. December last year, a joint venture between the company and Kumagaigumi started the construction of an elementary. Okay. I mean, sure. An elementary facility. So I mean that's sounds like more promotional than anything. Okay, housing business. In the custom-built detached housing business, we continue to put effort into making high added value proposals for housing that meets the ZEH specification, which produces net zero energy consumption. We also put effort into promoting sales of Forest Selection BF, a product that offers customers over 1,500 pre-planned room layouts online to select from, and increases orders for products in the high price range through the Grand Estate Design project. As a result, business performance remains strong, also buoyed by the effects of selling price revisions implemented by the previous fiscal year. In the rental housing business, we launched in May of last year the Forest Bark, a wooden commercial construction brand to promote the use of wood for offices, medical facilities. Forest Maison Grand, wooden construction rental apartments that strike a balance between design and performance. In the spec homes business, performance was sluggish as a result of price adjustments in some projects. There's a renovation business. Okay, also first timber and building materials business. I don't know why this is such low margin. In the distribution business, we work continuously on strengthening collaboration with our partners and expanding sales amid a difficult market environment on the backdrop in new housing starts in Japan. In addition, we focus on expanding sales of wood fuels or biomass power generation, which is unaffected by housing starts. As a result, the sales volume and the unit selling prices of fuels for biomass power production increased. However, unit sales prices of timber and wood products for housing construction declined. I mean, it recently increased, did it not? So let's see. So December, okay. Okay, so it's gone up, gone back down, and it's gone back up. Okay, so that's good for the company. which served as the main cause of sluggish performance. In the manufacturing business, results were sluggish in Japan as sales of building materials to home builders decreased. Overseas results recovered partly due to increased sales volume of laminated veneer lumber, LVL, in New Zealand and particle board in Vietnam. In addition, we continue to focus on promoting one-click LCA, which aims to standardize carbon-neutral designs to help construction materials distributors improve operational efficiency. We also expanded the functions of Core Estimate and launched the Core Logistics. Hello, we have 2 new viewers. Welcome, welcome. We're just looking at 1911 Sumitomo forestry right now. It looks cheap enough. I'm just trying to figure out, what is the angle here for this company. If you guys know anything about this company, please feel free to chime in. Renewable energy business. Results were sluggish as fuel prices continued to soar and caused a decline in profit margin. Although the wood biomass power plants established in 6 locations across Japan were in stable operation. In the forest resource business, the selling price of logs bound for China dropped in New Zealand, and costs for maintaining planted forests in Indonesia increased, leading to sluggish results. In August last year, the company started a new pilot peatland management project in Indonesia using advanced technologies. Okay. Other businesses besides the aforementioned business, the group engaged in a wide range of service businesses, include management of private nursing, home private elderly care facilities, nursing care, non-life insurance. Okay, yeah, they always do something like these. Let's take a look at their IP. In November 2024, we made Metricon, Australia's largest home builder, a consolidated subsidiary. Ooh, interesting. Very interesting. Okay. Only the balance sheet has been consolidated, while the statement of income is not being incorporated. Starting from fiscal year 2025, both the statement of income and balance sheet have been consolidated. Regarding the fiscal year 23 and 24 results, we have revised the initial purchase price allocation due to finalization of provisional accounting treatment related to business combinations. Okay, key points. The U.S. single-family home market continues to lack momentum in sales as home buyers maintain a wait-and-see attitude due to persistently high mortgage rates and uncertainty regarding the U.S. economic outlook. In the U.S., there is structurally strong housing demand given by population growth and a shortage of housing, particularly among the home buying demographic known as Gen Z and millennials, and the housing market is expected to continue growing in the future. While the business environment for the U.S. real estate development business continues to be challenging, leasing of rental apartment complexes has generally maintained firm. As such, we will carefully assess conditions and timing in making decisions regarding sales of properties. In the Australian housing market, profit margins have improved, whereas in Western Australia, continue to perform well, and Metricon, the industry-leading home builder that became a consolidated subsidiary last year, is seeing steady growth in orders and sales. It's interesting to me that they're able to buy an Australian homemaker when their market cap is only this much. Like, not only, but interesting. Well, I guess their enterprise value, they do have enough debt, I guess. Interesting. Okay. Continuing on. Japan's custom-built detached housing business, the rise in order unit prices, excuse me, due to a higher adoption rate of ZEH, has enabled us to secure a wide range of orders from high-end price ranges to those around 35 million, due to the increase in number of units under construction as a result of strong orders in previous fiscal year, combined with higher selling prices. Our profit margins improved, so led to both increased sales and profits. So as for the impact of the Trump's administration, policies on the U.S. housing and real estate business, many housing-related items, including wood, will be exempted from both additional tariffs and reciprocal tariffs. At this time, we expect the impact on our results from direct cost increases, etc., to be limited. The future business environment is extremely uncertain, so we have left our full year results unchanged. Is that still the case? Is it still the case? I need to double check that right now. Because things might have drastically changed since then. Lumber articles are explicitly included in an exclusion list under the executive order issued on April 2nd, 2025, meaning they were exempt from these new reciprocal tariffs. This exemption applied to all countries, including Japan, and was expanded on April 11th to include additional harmonized tariff schedule. Okay. So there's a 15% tariff on Japanese goods entering the U.S., lower than the previous 24 to 25. %85 of U.S. softwood lumber imports are coming from Canada. Okay, so currently there's, I asked Rock this, so they also keep that with a grain of salt. Potentially, yeah. So what is unaffected because it is a core, yeah, it's seen as like a core thing that the American population needs to buy, so they're probably exempting wood for that. Because if you increase the price of lumber and wood, then it's going to increase the prices of housing, right? So if you, yeah. Operating income decreased as a result of rising costs, including for land. In the U.S. single-family home business and increased personnel in preparation for business expansion. Okay, so they're expanding their business, hiring more people. I wonder what the split between U.S., Australia, and Japan sales are. SG&A increased substantially. So they don't have a lot of recurring income. Well, if they do single detached homes, right, they're not really doing it's not like apartments, right? Apartments you can do like lease management, right? Here you're just selling and then making a profit, and then that's it. It's like a one time, yeah. Mainly one time. So if there is a play here, it's like probably a comps play, right? So like as their footprint in Australia and the US continue to rise, right? Then for if you trade at, let's say half the multiples of a US comp or Australian comp, right? Like what is Buffett gonna think, right, to do here, right? They are large enough, right? 960, so 100 million. I guess Buffett likes drawing checks for 500 million, right? That's kind of like their minimum. Well, they have enterprise value 1.4. Yeah, they could buy. They could still buy. Okay, orders received, orders sold. So slight decrease on that. Oh wow, Australia housing. Okay. Due to the acquisition of Metricon. So this is interesting. So U.S. housing number of units ordered declined year on year due to uncertainty regarding the U.S. economic outlook and persistently high mortgage rates. The number of units sold also decreased year on year as the order backlog at the beginning of the period was low and the business environment deteriorated due to rising costs, including for land, an increase in personnel, and recurring income margin surprisingly 2.5%. Australia housing, due to the acquisition of Metricon, both the number of units ordered and the number of units sold significantly increased year on year. Profit margins also steadily recovered, and the recurring income margin exceeded the level of the full year plan. Okay, growth by acquisition. That's fine too. Sales 764. Sale price 457,000. Recurrent income 764. Lots owned. Completed inventory. Option lots. Option lots. Okay. So I wonder if they're using a strategy like the NVR. Interesting. Order backlog. More than double. %, entry 6.7, 7.3, 6.8, so it's kind of dropped a little bit. Not really. What exactly is the recurring income coming from, though? Is it just from people, like companies ordering single-family homes from them? Yeah, Dallas is a fierce area for sure. Yeah, I'm actually curious what it is recurring. Oh, recurring incomes. Oh, this is just oh, okay. No, this is they mean something else by recurring income. It's not. Yeah, no. So U.S. housing generates 15%. Wow, that's impressive. And then here they generate 5.6%. So U.S. is definitely what's driving this company. It's bottom line for sure, right? Yeah, if you think about it that way. Hmm. So was there a forecast period here? Sorry, let me just take a look. No, there's no forecast here yet. 8%, 601 EPS. %13% ROE. Good. $161. Everything else is like really low. So it's mainly 161. So that global construction and real estate takes up 80%. 80% of recurring income. So that is the most major segment. So if we think about it, so for example, when I was looking at round one, right, it was trading at like almost half the comps, the multiples, the valuation multiples of like local arcades. Sorry, publicly traded arcades in the US. So then the way to kind of further this analysis would be to look at how home builders in the US are trading at, what level they're trading at, and then look at also Australian companies and what level they're trading at. Yes. Interesting. I remember in the financial statement they mentioned Japan, but they don't state that over here. They just state U.S. and primarily Australia. So hold on, but then this doesn't add to 1673, right? So it's 974, 373. That's you know that's still under 1400. So I think probably the rest is Japan. Interesting how the U.S. housing recurring income margin is so much higher. So they have a medium-term plan where they want to expand their business foundation, improve profitability, and achieve stable growth in the overseas housing and real estate business. They aim for 17,700 units sold. They're currently at how many? A little under 13, so they want to expand another 5,000. By integrating our U.S. housing subsidiary, DRB, in Brightland, we will strengthen Brightland's management structure by leveraging DRB's management expertise in business infrastructure. Due to the integration of the two companies, we'll be creating a builder with a scale significant to 16 plays nationwide. Okay, interesting. And we aim to further expand the business through greater management efficiency. See, I like this. I like companies that expand overseas, right? So they're not really dependent on the Japanese market. Major news release: development of multifamily rental community near Dallas. So that helps with reoccurring revenues. First partnership, Nomura Real Estate Development. Okay. First for a Japanese company, office development through wooden expansion in London, UK. Sumitomo Forestry makes CD, please climate A-list. Doesn't matter. Doesn't matter. Okay, and Daito Trust Construction conclude basic agreement on wide-ranging business alliance, including utilization of Japanese timber. Design Award. Okay. I think I've seen If Design Award for something like Shinnikin before. So it's just like I think it's in regards to a mass timber office. I don't know where that's from, but yeah, when you build a certain type of building, you might get an If Design Award. Tender offer for Lee Tech. Rental housing operations by reinforcing our build to rent. Yes, this is very important. I think this is good. Oh, Lee Tech sounds very familiar. Let me take a look at that real quick. Was that a company that had a lot of bullshit going on before? There's one company that fucked shit up for everybody in the market. This one is not it. Or else the stock should have tanked more than that. This could be interesting because I want them to build. Construction is really one-off, right? So if they're able to buy rental housing operations, built to rent, that's always a good supplementary addition to any construction company. Hello, Leonard. It's just you. There's no guys. It's just us. Yeah. Yes, I think so. I think e-guarantee is A tier. Yeah. I don't think I add that to the list because it's not something I actively went through in this round of screening. I think I looked at that in the last round of screening. Yeah. Could be interesting. Okay, let's take a look at their comps because I remember, so in the tweet earlier, there was a tweet where it kind of showed where Sumitomo stood in terms of, you know, just scale. So we have a few companies that we can look at right now to perform like a really quick comps analysis on, and we can do that. So let's see. Well, what should we do here? 1 second. Okay, we already have this set up, right? What are the metrics? Are these good enough for me? Sure. Ignore this. This is something I've used from before. We just create new group and we'll call it 1911 comps. Let's do that. Okay. So first, of course, add 1911. Okay, and then we will add Dr. Horton. Ooh, what was that? Ticker. Dr. Horton. Yes. Okay. Lennar. Pulte Group. Yeah. NVR. If you know, you know. Who wrote that legendary stock pitch on VIC? Taylor Morrison. KB Home. I'm just gonna include the top 10 on that picture, and we'll do that. Meritage Homes. And then Clayton. Oh, Clayton is probably owned, yeah, by Berkshire, right? Century Communities. Yeah. And then LGI. Okay, so let's take a look at everything. So, in terms of size, oh, I'm dumb. I'm dumb. No, they're pretty big. Sorry, I kind of misunderstood their market cap. It was like 900 something million. Right? I divided by 1,000, not 100. It was no. It's not worth 1 billion. It's worth like 10 billion CAD. So that's like 7 billion USD. Okay. So in terms of market cap, there's four that are significantly larger. And then what do their comps look like? Let's see. Okay, so PE. So let's do descending. 8.5, 8.7, 9.5. They probably all have a lot of debt, but lower end 7 times. Okay, what's this? So also around the middle of the pack. Also in the middle of the pack. You probably have to look at their interest coverage ratios and stuff like that. So it's also around the middle of the pack. VR, DHO. Okay. Next 12 months. Next 12 months, everyone is operating kind of shit. And then in 2 years, let's see. Oh, that's the cheapest. It's determining if Sumitomo is an A or not. Yeah, Leonard asks, is it a deep dive right now? No, I'm just looking at Sumitomo right now. So they're in the middle of the pack. They don't seem like they are. Don't seem like they're severely undervalued though. They're just right there though. But then the idea could be like, hey, if you can borrow Japanese yen, right, then this could be very much in the ballpark for what Buffett would consider like a decent acquisition, right? They're a 6.5, right? So they buy like 5% of the company. That is a decent size investment that they can actually make in this company, right? That goes well with their like Clayton Homes type of investment, right? They offer 4% div yield, right? So they on the borrowed cash they make, and they're growing revenues and they're acquiring more U.S. construction companies. So if you're paying for this in terms of growth, pretty good. Spend in Australia, yeah. Interesting. Not too undervalued though. It's probably worth looking into. Let me take a look at what else other people are saying about this company. Just did people say anything? Oh, that's an interesting play. So Japan stock fleet said Toto 5332 washlet. Sales in US 5x since 2016. Looks to further penetrate US homes in partnership with Japanese home builders. Sekisui, Daiwa, along with Sumitomo Forestry. In fact, these Japanese home builders' share prices have been rippling higher in anticipation of US stimulus for affordable housing post-election. Right, so then the second order thinking of in addition to just investing in these forestry companies that also have a construction side and do single family home sales, is who are local Japanese businesses that benefit from this trend? And of course, toilets. Right, of course, it's toilets. What else could there be? Appliances. Although I will say that U.S. really tries to protect its own appliance industry, so like Whirlpool, but then GE appliances got bought out by Haier, so that's a different thing. But if we're going to be fair on an international scale, American appliance companies cannot compete. They just cannot. Their R&D budget is like way too low, and compared to all the big dogs, that can afford to throw money in R&D. So what else is in a home? Let's see, that are Japanese company. Air conditioning. That's also a higher industry, higher benefits from that. Okay, air conditioning, appliances, toilets. Is there a sink company? Washer, dryer. One thing would be exclusively Japan as well. I know Japan does really good with toilets, but what else do they do that's well? Air conditioning, appliances. Worth thinking, worth looking into. A toilet trade is definitely interesting. Actually, let me just take a look at 5332. That looks actually kind of that could be interesting. What was that again? 5332. What is that company's valuation look like? I have no concept of how big toilet companies are. No concept whatsoever. Oh wow. Okay, so a high of 7,000, which makes sense during COVID. You know, just replace your shitty toilet that you've delayed very long, and then yeah, construction, renovation. So they're able to maintain margins. I don't really see much operating margin expansion here though. It is competitive. I'm sure it's competitive, but having Japanese home builders penetrate a market is definitely good. Since 2016. Okay, so I did experience like an uptick, right? So that was probably factored in. Then COVID happened, and then that, you know, and then probably didn't factor in the idea of people renovating their places, but now it's tapered off. Okay, 16 times. What's LTM? 15 times. That is high. That is high. That is high. Okay, third level order thinking is potentially, are there smaller toilet companies in Japan where Sumitomo would be like, hey, you can't screw us too hard on these prices because you do have a competitor, right? So something that sometimes what companies will do is they'll buy some from a smaller manufacturer, even though there's a primary one. We all know that they want to buy from the primary one, but you have to keep the other guy in business, or else, you know, the other company can just charge whatever price it wants, right? So you kind of make orders. You see this in the slot industry in the U.S., for example. I don't know if that applies here, but third level thinking could be also like, are there any smaller toilet companies? That might be in the description, honestly. Overview. Are there any comps? 5938. Lexel. Lexel is also down. Let's see. Do they do what I'm... offers water technology, housing technology business in Japan. The company offers fixtures and vanities, including ceramic toilets, bidets, urinals, basins, vanities, bathing products, bathtubs. Okay. Okay, very much in that ballpark. What's their size? Okay, around 5 billion, and then 5332 is... Oh. Oh, very similar in size. Very similar in size, but... Could it be trading longer? That is really bad. These are shat margins. Oh yeah, these are shat margins. How is it trading at that valuation? How is that possible? And they have a lot of debt. And they have a boatload of debt. How the... Do they... What? Wait, what's their gross profit margins? Well, their SG&A is... Is that normal? Is 30% normal? Are they purposely growing the business rapidly, or is it? So their gross profit margin is 35, and then here it's 24. So they have higher SG&A margins. This looks really shit. Why though? Why is this company really trading so much? It's probably something I'm missing here. 700. So 1.2. 1200. Very strange. Is there income? Is there sales growing really fast? 1.5. What, 1500? No, stagnant. What the fuck? This makes no sense. This makes no sense. Why is this trading so high? Okay, ignore. Okay, 7981. Wow. So 174. Okay, so this might be the market share play here that I'm looking for. But we might be a little bit late. Let's see. Enameled products, okay. Enamel system kitchens, wood system kitchens, enamel system baths, enameled wash stands, sink units, heating units, hot water unit heaters, enameled water covering materials, all their home appliances equipment. Primarily sells its products to various showrooms in Japan. The company is formerly known as Nippon Enamel. Okay. Let's take a look. Okay, it's profitable, but like, not marginally so. Not great. Okay, low multiples. Okay, so let's see here. So this is 174. Oh, price skyrocketed. Okay. 7, 51, 50, 120, 120 enterprise value. So this is doubled just now. It just doubled. So 120 on 15. Is that 9 times? 8 times? 8 to 9 times. So it's definitely not as cheap now. Definitely not as cheap now. It was pretty cheap before. PE is 13 times 242. So PE now would be 10, 17. No. See, I would not be surprised if they had some contracts for the U.S. expansion part, and someone just missed the boat on that completely. 15. Okay, so I went from 16, 2600 plus 1,000. Okay, that's around 60%-ish. Sanma. What do they do? Steel construction materials for commercial and residential construction in Japan, North America, Europe, and Asia. Oh, interesting. Lightweight shutters, condominium doors, window shutters, oh, so this would benefit for sure if they have U.S. sales. Storefront products, window products, residential door products. Yeah, shutters are definitely important. Yeah, residential garage doors, automatic door products. Yeah. This would definitely benefit from that. That would definitely benefit from that. So let's take a look. 10 billion. Oh, very healthy. Very healthy margin, 10%. So expanding. So let's see how it did from 2016, right? Because that's a period where people enter. So 7% expanded around 10%. Very good. Yeah, awesome. Enterprise. More cash. Nice. More cash. So it's worth 900 now. A year ago it was worth 500 million MCAP. Okay, around 57. Let's call it 50, whatever. Make it 80, 870. Yeah, still not cheap. Still not cheap. So, I mean, yeah, this. One-time sales. I'm thinking. It's not incredibly cheap. That's not bad. And potentially, okay, so they did list out some things in the medium-term plan, like acquiring or upping their stakes in certain companies, continuing with acquisitions. So if they were to continue doing that, because they have the balance sheet to kind of expand, so this could be very interesting, in that they just need a good enough balance sheet for it. Right? So let's take a look at enterprise value. So I think the net difference is 400, right? 400. They went from 575 to 600, so it hasn't gone down yet. Cash balance has increased though. 50, but that's probably what is required to. You need working capital for it to build these things, right? So. Horizon. Yeah, I think if the idea is they're going to continue to grow, right? Because they can grow in Australia too, they can capture more market share in the US. One thing I haven't gone to yet is what is their actual competitive advantage. I don't know, because they're not like, it's not like they're sourcing the lumber from their Japanese operations and sending it to their U.S. operations, right? That might be something if taxes are extraordinarily high, tariffs are extraordinarily high on Canadian timber, right? But the Canadian border is right across. So in terms of actual structural advantage, procuring lumber from Canada should be cheaper because the transportation costs are lower, potentially. Okay, I will factor this into an A. But I would say that I don't know enough about this company for it to be any higher than that. So that's probably the issue here. But it has had a great run, and if you were able to get in at like really low multiple, like it was offered at a pretty cheap discount before, I think. Actually, it's okay. 4.8 times. Yeah, it's fiscal year 2022. 5 times, yeah. Cool. Yeah, I would say, So the idea also could be that because they're only the size of their market cap is so small, right? If they're an underdog taking up market share, right, just through acquisition, like consistent acquisition, then it's a roll-up strategy, right? If it's a roll-up strategy, you have cheap Japanese debt rolling up U.S. construction firms. Then if you look at it from that perspective, then it's cheap. Then and at current current multiples and dividend yield that you're getting, this is cheap, right? So then I think what needs to be done here is we have to look at the medium term, IR, whatever that is right now. Financial fact book. What is this? Okay, really offsets and KPIs. Where's their? I want to read their medium-term plan if they have that. Integrated reports. Didn't they have? Yes, medium-term plan right here. Transcript. So we can see what analysts say afterwards. A lot of ESG stuff. Okay, wow, they have the #1 market share in Australia. Interesting. So then the question is, what is this #1 market share position afford them, and what exactly is their #1 market share? Is it the market so saturated that they have like a 3% market share, 5% market share? Like, what is that? We have to contextualize that. They want to buy up 1 million hectares of forest. Interesting. Yeah, so if they target, having making this much units, then these multiples are definitely cheap. Okay, so they successfully increased their price to book ratio. PE ratio also expanded to 2 times. Phase 3. Stable procurement of prime land for expansion of U.S. spec homes, business as a revenue driver, secure pipeline using option contracts with focus on ROA improvement and turnover period. I'm going to look into this. I think this is something close to what they're doing with NVR, what NVR is doing. Because that explains why their margins are so much higher, because you're putting less cash up front. You're buying the optionality to build, so you don't actually have to build. Their share price. Oh, they did a 3-for-1 though, so that's kind of. Sorry, 1 sec. When this came out, so this minimum 50. Okay. So minimum 3%. Yeah. So they're at 1,500 right now, so 150. So sorry, 50 would be around 3%, a little over 3%. Multi-family wood construction and single-family wood construction. Trying to build 17,700 by 2027. Okay. Market share is going to increase, and that's going to happen. Okay, they want 15 or more factories. Oh. About 10,000 units by 2030. Wow. Okay, so they have a lot of promises. They're making a lot of promises on in terms of growth potential here. If they're able to hit any of these targets even at 50% of this level, then what you're paying for it is cheap. The problem is, are they able to get there? I don't know how they're going to get there. I don't know. I'm new to this industry, so I need to... Yeah. That's something to figure out. Seven-story office building. It's impressive. Interesting. So existing home inventory is going down, and sales volume is also going down. So does that mean demand is extraordinarily high? Interesting. Looks very interesting. Okay, yeah, no, I think this definitely, if they're able to meet any, okay, so to summarize, essentially, Sumitomo, how forestry doesn't look super undervalued, but the idea is this, right? They trade at 1x price to book. They're expanding their margins. They're enjoying improving operating margins because of their U.S. Business. Okay, and its growth projections are quite optimistic. I'm not sure if they're able to meet them because U.S. market is a competitive market. But they're using essentially the reason why their margins are so high is because they're using real estate option contracts, which just provide an option to build on the land. They don't actually have to do it. So it kind of, I want to say, de-risks it a little, right? And so, yeah, if they're able to continue to gobble up market share from the big players, who all have north of 20 billion market cap USD, and they only have a market cap of just south of 7 billion. The India is a couple. One is deleveraging of the balance sheet, consistent dividend yield, trading at one times book, so consistent paying down debt, and then using cheap debt to also expand into acquiring either other home builders, building out more home factories to build their capacity out, and yeah, and then the market trend right now is also that the historical inventory of real estate is also at an all-time low. So if there's demand, if there is demand for that type of thing, then they can definitely gobble up more market share by contributing to additional inventory into the market. But I am new to this kind of industry, so and then the forestry, like I'm kind of at a loss here. I don't know why their forestry margins are so low. I'd imagine that they should be higher, but not really sure what the dynamics are there on an international market basis. So, but yeah, no, at these levels, pretty cheap. Not severely cheap, but like cheap enough. Yeah, so I would put it A. It seems like a pretty stable business and probably going to continue to grow. And they're pretty small in terms of like the market share that they could grab if they were to continue rolling up, if that is part of the strategy, if it is a roll-up strategy. And yeah, so that's why it's an A. And it trades at yeah. So if you're paying these multiples, the multiples that I mentioned, for the growth that they're saying that they're trying to meet, including the value of their long-term investments, then this becomes pretty much a no-brainer. Pretty much, yeah. So they can unwind this to pay down debt. They can unwind this to make an acquisition. They can, yeah. Looking good. So yeah, that is it for today. Thanks for tuning in, guys. Glad I was able to find 5 A shares. So then what I'm going to do is going to compile these 5 stocks. Or I'll wait till maybe do 1 or 2 more live streams so that I can get like a buffer of 7 or 8, so that if there's one I don't like too much or don't feel too strongly about, then I can make a different, like a better top 5 list. So that actually might be what I'll be doing. I will be probably doing 1 or 2 more streams to find 2 or 3 more A tier plus stocks. Hopefully I find 1 S tier stock. But if I don't, then I will pick the best 5 A tier stocks, create a post, and upload it on my Substack. So look forward to that when that comes out, and thanks for tuning in, guys.